Welcome to the Finance Fusion, your clarity code for complex finance fundamentals. Today, we'll decode how investment banking helps government with the financing needs. With the range of specialized services, investment banking is essential to meeting government's funding demands. These banks serve as the middlemen, facilitating the issue of loans, guaranteeing the favorable terms, and underwriting securities in order to reduce risk. While market research direct well-informed decision-making, advisory services customize financial plans to meet certain government criteria. Government securities are made more appealing by secondary market support and customized debt structuring. Investment banks support economic development by helping with risk management, hedging, and access to international capital markets. This mutually beneficial collaboration is essential to develop the robust fiscal policies, promoting sustainable growth, and advancing national infrastructure projects. Number 1. Government debt issuance. One important way that government raise capital is through debt issuance, which involves selling bonds or other debt instruments to investors in order to raise the necessary fund. Investment banks are essential middlemen that coordinate these deals, maximize pricing schemes, and improve market liquidity. Point 2. Underwriting government securities. Investment banks assume a crucial function in the underwriting of government securities by guaranteeing the sale of these financial instruments to investors. This crucial risk management role lowers investors' uncertainty and strengthens the case for government debt as one of the safe investments. One important assurance mechanism is provided by the investment bank, which takes on the risk of unsold securities. The bank receives the underwriting fees in exchange for this service, aligning its interest with a successful loan placement. This mutually beneficial connection promotes the trust and makes it much more easier for the governments to access the capital markets with lower risk, which is a sign of investment banks' skill in reducing risk when it comes to assets of the government. Number 3. Advisory services. Investment banks provide government with invaluable advising services in addition to underwriting, creating customized financial plans to meet their particular needs. Investment bankers use their knowledge to maximize the government's finance structure, whether they are negotiating funds for infrastructure projects, controlling budget deficits, or addressing economic difficulties. Beyond merely facilitating the transaction, this advisor position includes through financial planning that is in line with the objectives of the government and the state of the economy. Investment banks serve as a strategic partners to governments, assisting them in making well-informed decisions that improve fiscal resilience and help them to meet long-term financial needs. Number 4. Market research and analysis. Investment banks do in-depth market research and analysis, giving governments the important information they need to make wise before any decision. This entails a careful analysis of investor sentiments, market dynamics, and interest rate development. Investment banks help governments strategically time their debt issuance, maximizing outcomes in capital markets by staying ahead of the curve. This proactive strategy reduces risk brought on by the erratic market dynamics while also improving the government capacity to get favorable terms. In public finance, the combination of strategic vision and thorough market knowledge enables governments to precisely navigate economic environment. This results in smart decision making and strong financial outcomes. Number 5. Debt structuring. One important aspect of government finance is debt structuring, and investment banks play a key role in this era. They skillfully adapt financial products to meet the various demands of government. This complex procedure frequently entails crafting bonds with range of maturities, interest rates, and other characteristics that are purposefully created to appeal to a wide range of investors. Investment bank maximizes the government capital mix by balancing risk and return by utilizing their expertise in finance. In addition to being in line with the government's budgetary objectives, this approach to debt structuring improves market appeal and cultivates a steady and a varied investor base for a long-term financial stability. Point 6. Secondary market support. Investment banks continue to vital supporters of governments in the secondary market, even after the original issue. As a part of their continuous assistance, they market, make, and trade government securities to guarantee liquidity, investor confidence is increased by the active engagement, which helps to maintain a steady and a liquid secondary market. Investment bank hence are very essential for enabling seamless transaction, maximizing price discovery, and preserving the market order. This ongoing interaction strengthens the overall appeal of the government debt as a dependable and alluring investment option and benefits market participants as well, highlighting the long-lasting collaboration between governments and investors. Point 7. Risk management and hedging strategies. Because governments are vulnerable to the same financial risk as any other organization, investment bank assists them in developing effective risk management and hedging plans. Investment banks and government collaborate to adopt customized risk mitigation strategies in response to the obstacles like interest rates and currency issues. This entails using complex financial tools such as derivatives to protect against unfavorable changes in the market. In the risk management, governments and investment banks have a symbiotic relationship that emphasizes that the latter critical role in strengthening the fiscal resilience. Investment banks helps protect government from possible financial volatility by using preemptive tactics and hedging techniques. This provides stability in the face of shifting economic conditions. Point 8. Global capital market access. Investment banks play a crucial function in providing government with access to foreign financial markets, which is an essential undertaking for countries seeking to broaden their investor base globally. By skillfully facilitating the cross-border transactions, investment banks enable governments to access a larger financial source. By diversifying the funding sources, this increased reach not only improvises the financing alternatives, but also promotes economic resilience. Governments can optimize their capital structure through the access to the global market provided by the investment banks, and this helps to reduce dependency on domestic markets and creates opportunities for strategic financial collaboration on an international scale. This increased involvement highlights how important investment banks are for the governments, also in determining the nature of the global financial ecosystem. Point 9. Economic development and infrastructure financing. Seeking substantial funding for infrastructure and economic growth, governments go to investment banks for their expertise in developing financing solutions that support their long-term objectives. This kind of teamwork is essential for boosting economic expansion and advancing the development of the country. Investment banks optimize the ratio of risk to profit by designing the customized funding strategies based on their expertise in finance. Through the provision of effective and long-term funding for infrastructure, these banks significantly influence the physical and economic terrain of the nation by promoting a development and adaptability. Government investment bank collaboration thus serves as a catalyst for the revolutionary economic growth at the national level. In conclusion, investment banking stands as a cornerstone in government's financial ecosystem, offering a diverse array of crucial services, from facilitating debt issuance and underwriting to providing tailor-made advisory solutions. Investment bank optimizes fiscal strategies. Their role extends to mitigating risk, enhance market liquidity, and enabling global capital success. This collaboration supports economic development, ensuring funds for vital infrastructure projects. Investment bank multifaceted assistance not only addresses to immediate financing needs, but also contribute to their long-term goals. The enduring partnership between government and investment bank remains integral to navigating the complexity of the financial landscape and fostering sustainable economic growth. Our journey into this financial clarity doesn't end here. Explore our archive of videos for a wealth of knowledge just waiting for you. If you found value in today's video, give it a thumbs up, subscribe for future insights, and share it with your friends. Remember, the more we learn together, the stronger we become. Thanks for being part of the Finance Fusion, your campus to financial enlightenment.